volatility is what we sign up for when we get into this game, and frankly, without it, we wouldn't be making any money. But there can be too much of a good thing. But when the VIX is up and up and up, our panelists rise to the challenge. They're all about seeking and capturing alpha. And they're going to come up here and discuss that, and also how they think about things that seem like more inherently risky alphas, like for example, digital assets. And we've got a great panel to do that with. So they're going to come up, led by their moderator, Mr. Albert Goh, who is the Chief Investment Officer at the Hong Kong Monetary Authority. Here he comes, and he's bringing the panel with him. He's got Chris Gradel. Chris Gradel is the co-founder and CEO at PAG. We also welcome Sir Paul Marshall. Sir Paul is the co-founder and CIO at Marshall Wace. And rounding out this panel, we welcome Peng, who is the CEO at Citadel Securities, all the way from Miami. Ladies and gentlemen, this is your panel. Let's talk risky assets. Thank you. Albert.
Thank you very much. Welcome to our panel risk takers. And today we have 3 very successful risk takers joining us on stage. I'll do a very brief introduction. Zhao Peng, Citadel Securities, CEO, one of the world's leading market makers who combine deep trading acumen with cutting-edge technology to deliver critical liquidity to the global markets. I got this from your website. Sir Paul Marshall, founder and chairman of Marshall Wace, a leading hedge fund, found for pioneering alpha capture strategies by integrating systematic and fundamental processes in portfolio management. I got this from your team. And Chris Gradel, the CEO and founder of PAG, whose firm is the largest fully diversified alternative investment manager in Hong Kong. I got that myself. So let's kick off with you, Peng. So Peng, you have completely and successfully disrupted the traditional market-making industry. Don't worry, we're all buy-side here on the panel, so this is a safe environment. I don't know about outside, but here, we're safe here. How did a newcomer like Citadel Securities become one of the largest market makers in the world? What is your secret sauce?
Thank you, Albert. First of all, well, thank you for having me, and thank you for that very nice introduction. I was about to say that was such good writing, and I found out my team wrote it. Well, first of all, we prefer the term innovator. Yeah, I mean, as a market maker in particular, you really don't want to be disrupting anything. But you're right, and it is right in the write-up that you gave as my introduction. We took a technology and analytics first approach to solving market problems. And that was our core insight from day one. And we combined that with a deep commitment to both understanding and solving real market problems. Right? So oftentimes there's this misconception that we build these fancy black boxes, and we do have them. But it's just as important what we put into the boxes. We have, in fact, as many financial professionals in trading and research as we have in quantitative research, actually more. So deep product insight, deep market insight, deep understanding of what our counterparties are looking for, what are the best ways for us to solve their challenges, their problems, and add value for them. And all of that combined with a commitment have had since day one to world-class talent. And that's been the recipe for our success that we have been able to apply over and over again. Now we're in over 50 different countries, over 100 different markets. We have offices all over the world. We trade anywhere from the more boring US stocks, that was touched on multiple times at your conference today. And then all the way out to developing countries here in Asia, in Europe, and everywhere else. And we just launched our credit business this year as well. It's really that philosophy approach that, that we've been taking to all over the world in the world of finance.
Thank you very much. Over to Paul. Please tell us about the amazing journey of Marshall Wace. What made you develop your famous alpha capture system and your sophisticated trading system?
So we started in 1997 as a small European long-short fundamental firm. About 4 years in, we developed alpha capture. And to be completely honest, it started almost as an accident. So my partner, Ian Wace, who was from the sell side, he said, listen, we got all these brokers. We're paying them lots of commission. How do we work out whether they're actually worth the commission we're paying them? And historically, with the way you allocated commission was just a little bit of this, and it was very subjective. So we said, well, let's measure them. And to measure them, the web had just really come into to play. And so we had a very brilliant young trainee who developed, it was called Anthony Clegg, who developed a web-based system where we effectively reverse engineered our relationship with the street. So we asked all of the people who covered us to start running virtual portfolios for us. And to my utter surprise, there was a lot of alpha. As a result of that, about a year later, we said, well, wait a minute, we have this incredible source of alpha. Why don't we turn this into a portfolio for ourselves? And that led to the development of optimization, portfolio optimization, and then quantitative trading. And then later on, we took all of those learnings and those systematic skills to our fundamental business to deliver the same types of optimization and trading skills and applications across our business. And now the business is roughly equally divided between fundamental and systematic strategies. And we've brought in all kinds of data applications into all parts of the business.
Thank you very much. Chris, you were born in Northern Ireland, but you spent your professional life mostly in Hong Kong and China, building PAG into a $55 billion asset manager. Please share with us your journey.
Yeah, so I guess it's a long way from Northern Ireland, but I was lucky post-university to sort of have an opportunity. Well, I was sent to China by sort of a large private investment firm and started, this was 1995. And, you know, I just found it just an incredibly exciting place to be. And, you know, was fortunate enough to be able to, you know, lead several investments in China in the 90s. And, you know, when I turned 30 and had a big sort of midlife crisis and sort of felt if I don't start my own business now, I'm going to be too old. So when I started my own business, you know, I think I always felt that I wanted it to be a regional business rather than a pure China business. And I felt Hong Kong was the place to do that. So we started in public markets as a hedge fund and then evolved over time to private debt. And then actually 2008, which was, you know, obviously tremendously stressful time, you know, we managed to, you know, make money, survive that, and that really opened up just a lot of opportunities. And we, you know, surviving that, having invested in an infrastructure, then that allowed us, you know, we acquired a real estate firm. We were able to attract some great talent, and really then we became the firm we are today, where we have private equity, real estate, private debt, and public markets. So we started as a hedge fund, and it's still an important part of our business, but we're very diversified now, both on asset class and across the region. And I think it's good for us as a firm. It makes us more stable, but also we can flexibly look at opportunities and go where opportunities are, and we're not looking at only one opportunity.
Thank you very much. Okay, let us shift gears to Hong Kong. Peng, thank you very much for building up your amazing franchise in Hong Kong. Tell us more about your Hong Kong connection and what prompted Citadel Securities to double down in Hong Kong and China when others hesitate.
Sure. So I was born and raised in Beijing, but my father worked in Hong Kong throughout the 90s. And I spent my winter break almost every year in Hong Kong growing up. So not only have a personal affinity to living in Hong Kong, much of the reason why I think I ended up in finance was because this nerdy boy who was into mathematics and programming, who also got this exposure, very early exposure, especially for other kids who grew up like me, to financial markets. So everywhere, I remember, every channel I was flipping through when I was in Hong Kong, there's always this rolling screen of a banner of red and green and charts, and if you're into numbers, you get really fascinated by that. So part of the reason why I am the CEO of the largest market maker in the world has a lot to do with having the time I have spent here in Hong Kong. Now, that is not the reason why we have grown our team here in Hong Kong. It didn't hurt. But we've always seen Asia and the greater China region in particular being not only has been one of the largest driver of global growth and innovation, and we continue to believe that it will play a tremendous part on a go-forward basis. So seeing the opportunity in markets, seeing the opportunity in talent, make it that it baffles us when people do not invest like what we have done. I mean, in fact, during the years of COVID, despite the challenges, we have doubled our headcount in the APAC region. And Hong Kong in particular has advantage. I tell my team that, look, we're in Japan for Japan, we're in Korea for Korea, we're in India for India, but we're in Hong Kong to have a base and a hub for all of Asia, and even globally, from a talent perspective. And just yesterday, I caught up with a friend who I got to know at University of Chicago, and who moved to Hong Kong to help run one of the programs at one of the top universities here in Hong Kong. And over the last few years, they built a new program, and last year alone, they had 2,500 new students, almost brand new program. That's the size of a college in the United States. I think only here in Hong Kong, a story like that can happen. And that's just a small example from a talent perspective alone.
Thank you very much. Paul, you set up your Hong Kong office in 2006 and built quantitative strategies to extract alpha from local markets. Now, that's way before anybody else did. What drew you to Hong Kong?
So Hong Kong was our chosen hub for Asia. I think a lot of people in those days would have chosen Hong Kong as the hub. And I was very pleased to hear yesterday people talking about common law and the rule of law, which is it's a really important factor. Common law, the common law is by far the best type of law for finance because it allows principles-based approach to lawmaking. And so it's great to hear the emphasis, and that's no small thing. The talent here is very strong. And then, of course, 2013-14, the opening of Shanghai Connect, Shenzhen Connect, was a huge event because Hong Kong is clearly the gateway to China. And China is most years the best alpha market in the world for us. And may make double-digit alpha unlevered from China. This year's been harder, but most years it is a fantastic alpha market. It's a very liquid market. It's the second most liquid market in the world behind the US. The liquidity's 4 times Japan, more than 4 times European markets. So it's a really great and vital market for us. And we now have Asian offices also in Singapore and in Shanghai, but Hong Kong remains our largest office, and you know, there's lots to come in terms of further deregulation and opportunity.
No, that's a very good point. I'm a trained barrister, and I think common law in Hong Kong is so understated and such a key point. Thank you for raising that. Chris, you were a competitive rower at Oxford. Now, I've done enough rowing myself to know that rowing is a cruel sport. In rowing, everyone will hit that massive wall of pain, but only those with a good mental strength to push through that wall of pain will win. So is operating and investing in Asia a bit like rowing these days?
I don't know which wall of pain, hopefully not one that's coming. But no, look, obviously, I think all markets have challenges and opportunities. And, you know, I'm very glad that we are diversified across the region and markets, because definitely opportunities come and go, and markets provide more alpha, less alpha, more opportunities and less opportunities. You know, I think we, similar to Peng, you know, we do part of our philosophy is to be local in the markets. And I think that's very important. So we have local teams in all the countries we're active, but Hong Kong is our main office as well. And I think on public markets, on support functions, there's the deepest pool of talent in Hong Kong, which has helped us tremendously in growing the business. And, you know, I think geopolitics is, of course, a topic that many people have talked about, and obviously there was some movement perhaps out of Hong Kong, but you know, well, I'm biased. I think Hong Kong's the best city in the world. I love living here, but you know, we recently hired a new CTO who was CTO of one of the big global firms, moved from New York to Hong Kong. We've had no problem actually attracting talent here, and there's a good base of local talent. And you know, maybe Singapore's been a victim of its own success. You know, we now face bottlenecks there, which we don't face here. So I think for us, being in Hong Kong is a great place. It's the most convenient location to deal with the region. Again, the legal system is great, and it's very encouraging that last year, when President Xi came, he actually stated that the one country, two systems would extend beyond the 2049. And I think many people focus too much on the one country and forget the two systems. I think the two systems is very important. So, yeah, Hong Kong for us has actually been a very great, flexible place to sort of oversee our activities around the region.
Thank you very much. I think Paul also has something to say on talent and attracting talent in Asia.
Well, just to say, ahead of this panel, I looked at the Marshall Wace demographic breakdown. In fact, 24% of our workforce worldwide are ethnic Chinese. So we employ about 550 people. And by no means all of those are in Asia. We have a lot of ethnic Chinese in the US and the UK. But there's also something which is very intriguing to me, is that Chinese women are extremely good portfolio managers and analysts. And we have, the sample size is not necessarily big enough to do a kind of proper academic study, but we have an incredibly high hit rate of very good and successful Chinese women at Marshall Wace. So we'll see.
We will. So Peng, you're not escaping this one. So again, on the talent war, Citadel is clearly fighting a very unfair war. You recently took your entire firm to Disneyland in Tokyo. By the way, we do have a Disneyland in Hong Kong. So how's the talent war working out for you?
Well, I mean, that's a good example of deep commitment to our talent and employees. Actually, we did it twice. We brought all of our employees and partners and their family to Disney Orlando end of last year, but from North America and Europe, right? And but for our families here in Asia, taking your kids out of school for 3 days is unthinkable. So therefore, we brought ourselves here to Asia and hosted all of them in Disney Tokyo. And the reason that it's not in Hong Kong is because most of them already live in Hong Kong. So that wouldn't be quite a getaway. That's more of just a regular weekend. But yeah, no, I think deep commitment to talent means not just, you can't just have that as lip service, right? That means when it comes times to make difficult decisions, you put talent first, right? From a willingness to delegate our most important decisions to the lowest level within the organization that's appropriate, to, you know, we're one of the first firms to bring all the employee back into the office. You know, look, it's a lot easier for ourselves as senior leaders to operate from our homes, but if we don't bring everyone into the office, if we didn't bring everyone back into the office, then we're depriving the newer members of the team from the fulsome growing and training experience that they would have deserved. And that's also part of our talent strategy, where we don't try to be everything to every person. We're very true and firm to how we want to operate. And we're very transparent about it as well. And we don't have to be the firm for everybody, but we want to make sure that if they are signing up to our culture of meritocracy, to winning, to integrity, they're going to get the best chance to build a successful career anywhere in the world of finance. I'm sure every panelist is going to say the same. This past year, we have had not only our largest class of campus hires that we've ever had, but it's also been the most selective. For every new member of our team, there were more than 200 applicants. They had to each beat out 199 other applicants to get a job here. And that trend is continuing because we already have early data for this year. Yeah.
Okay, Paul?
Well, I wanted to say something slightly more serious from my end about the talent war, because clearly that phrase is now circulating and it's describing something that's going on, which is led by the platform hedge funds, paying incredible amounts of money to target people. Now, on some level, that is justified in the sense that I do believe that the Pareto principle applies in fund management as much as in other parts of life. And everybody wants that Cristiano Ronaldo on their team, but there aren't very many Cristiano Ronaldos. And what's happening is everybody's getting paid the same as Cristiano Ronaldo. And it's leading to a commodification of human talent, so that people are getting paid very big, silly sign-ons, and then they last 2 or 3 years, and then they get fired, then they go somewhere else, and that's not the right way to build great businesses, or even to build a great industry for our clients. And so What we're trying to do is build IP in people. So when we hire people, we put everything around them to support them, to be the best of themselves, so that they stay with us and build sustainable careers, which will end up for them being a much better choice than going into this kind of battery hen farming merry-go-round, which is what's happening to some degree in the platform world.
I mean, just to sort of, I mean, we've had from our, we have a platform as well, and you know, we've seen some staff bid away for literally 8-figure numbers on sign-ons, which is absolutely insanity. And we say, you better take it, you know, because, and given again, the whole platform model is very much, you know, it works because, yeah, you cut losses quickly, and often the lifespan of portfolio manager can be quite short in some of these platforms, so which makes it even more insane to spend these values, as Paul said. You know, I think for us it's, you know, we really need to, what we're trying to do is create an environment where the PM can be successful for the long term and build a career and around that. And that, you know, after people have been spit out by some of these firms for a while, actually, and you can see it in Japan in particular, you know, the industry is sort of like, well, some of these firms are career killers, you know, and people actually look for a place which is more supportive. And so we've had a very positive sort of experience. I think this is a temporary phase. It's a very bad phase. It's good for certain people, I suppose, for some PMs, but it's not good for the client. It's not good for the industry.
Thank you for saying that. We don't like paying fees. Thank you. Okay, let's switch gears a bit, given the time. As I did my research on the 3 panelists here, I must say I'm very inspired, in particular to all of you, because you have all given significant personal wealth away to charity. And oh, by the way, we have colleagues on standby to help you set up family offices in Hong Kong on your way out, so don't leave too quickly. But I'll start with Chris. So Chris, you set up the Institute of Charity at Oxford. Can you tell us a bit more about that?
Well, you know, I think the whole sort of world of charity, you know, it's actually amazing how little research has been done in terms of the effectiveness of charities, in terms of their giving, in terms of what organization structures work better and less. And, you know, the university had an idea, and I thought it was a fantastic idea to sort of really invest in this. And again, I didn't realize how big the gap was. At the opening of it, we had the head of many global charities came. We had the UK government head of charities. We had a lot of academics from around the world came, really excited about this and how important they felt it was that there was more research done in this area. And so, yeah, I was excited, but when I saw the enthusiasm, I actually became a lot more excited. And so hopefully we'll see some interesting sort of research come out of that.
Okay. Paul also leads in this area. I think you famously set up the LSE Marshall Institute for Philanthropy and got knighted for it, I believe.
Yeah, kind of.
Please tell us more.
No, I didn't realize Chris had done that at Oxford. So the interesting thing is that, I mean, we set this thing up at LSE about, I guess, 7 or 8 years ago. I don't know when
just this year.
So we took the donation. We went around all the UK universities and offered them a donation to set up an institute. And at Oxford, they said, "Oh, I don't think this is worthy of academic study." So
because you're from Oxford too.
Yeah, and I was from Oxford. That was my bias to go there, but they weren't interested. So they obviously had a Damascene conversion along the way. You've obviously converted them. And but so we did this at the LSE, and then we set up what's called the 100x accelerator. So we're trying to replicate what the Y Combinator did for the private world for social enterprise. And I agree with Chris that essentially, actually, the charitable and philanthropic world is massively worthy of study. There are different types of metrics you need to apply. You need to study different types of the way incentives work, the way altruism works. All of these things are not properly analyzed and understood. And so, there is huge potential both for what you're doing and what we're doing. We should join forces.
Yeah, absolutely.
All right, Peng, your turn. Thank you very much for being a co-founder of the Asian American Foundation. I think you are pretty much paying all the bills for that. Can you share with us how this foundation is supporting the Asian community in America?
Yes, thank you for giving us the platform to talk about very important works, and truly inspired by the work that my co-panelists have done as well. I'd love to catch up more about that. So I think it was right around the time of pre-pandemic. I was noticing, unfortunately, this trend of rising discrimination that oftentimes, too often translated into acts of physical violence against the most vulnerable members of the Asian American community. It turns out there were a number of like-minded people among my friends as well. So I got together with my co-founders, with Jerry Yang, Zhou Cai, Zhou Bei, and Li Lu. We got on to a discussion with Jonathan Greenblatt, who is the CEO of Anti-Defamation League. That's the leading Jewish anti-hate organization in America, and start discussing what we ought to do. And that kicked off a real working group together to figure out what's the right strategy. And one of the things we discovered was also that even though Asian Americans are the fastest growing population within America, it counts for more than 5% of the total population, but only 0.2% of the philanthropic dollars in America actually went to Asian American community. So instead of learning how to bake or adopting a dog or have a new baby, we got together over COVID and funded the Asian American Foundation, which ended up being the largest philanthropic launch for Asian Americans. So starting from launch within 3 weeks, we raised more than $1 billion for the community. And since then, we find it that not only there's the critical mission of to protect and create a sense of belonging, there's also so much opportunity to celebrate the contributions that the Asian American community have made in the country of America. I can go on and talk about this for hours, but I'm going to use this as an opportunity to give us a shout out. So if you want to learn more, go to www.taaf.org and learn more about the work the team has been doing since we've started it.
Okay. So we actually have an entire section on innovative, disruptive technology and all that, but I think we're running out of time. So I'll just jump straight to just one, and I'll direct it at Paul. So Paul, in 2020, you wrote this book, a bit lighter than Harry Potter, but it is titled 10.5 Lessons from Experience. And it's your perspectives on fund management. And in there, you basically wrote about cognitive bias, the use of data and systematic strategies by fund managers. And if your editors would call you today to add a chapter on AI and ChatGPT and whatnot, how would you write it?
I think, and it was interesting to see how much it's come up in the last 2 days. I think generative AI is very overhyped in relation to fund management. It's overhyped because of ChatGPT obviously led to kind of retail awareness, and as somebody said earlier, every CEO needs to know how they're deploying AI in the firm. But for a firm like us, we've been doing machine learning and natural language processing for upwards of a decade, and that's massively important. So that, in that sense, AI, that kind of AI is massively important to our business. Generative AI is essentially primarily a search, a much more powerful search engine. Somebody called it a stochastic parrot, which I thought was an amazing phrase. But it has an incredible ability to search the web for data and to summarize very, very quickly. That doesn't necessarily lead to changes in alpha generation. It is, for us, primarily a productivity tool. So if you look at the use cases in Marshall Wace of a generative AI day, they are primarily twofold. One is helping our coders, so the co-pilot function, and the second is summarizing text for our analysts. So it just massively enhances productivity, but doesn't necessarily lead to changes in the ultimate alpha. It just makes it less expensive, hopefully, to do it. It should lead to productivity transformation in every part of the business, and even the lawyers. So the ultimate profession, which has never been disrupted, may finally be disrupted, which would be wonderful. So if I was doing another chat, I used a quote from Gary Kasparov when he lost to Deep Blue. He said, the machine beats the man, but man plus machine beats the machine. And that would still stand. So it will massively, and is massively transforming, AI generally is massively transforming the business, but you're going to still need humans to be the people who generate the hypotheses and point the machines in the right direction.
Peng, you're a leader in that field. Any comments or responses to that?
Yeah, I mean, I think our view on the field is amazingly similar to Paul's, so I'm not going to repeat those points. I'll just simply add to it. I think one aspect of all of this is some of the tasks that firms like ourselves have been able to do in the past that define part of our success are easier to do, given the more broader availability and easier availability of some of these tools that make those things easier to do for other firms. And I think that's as a phenomena, that's certainly true for the financial services sector, but other industries as well. I do think companies and institutions will get paid less and less for simply competently carry out some repetitive tasks. And it become more and more important to have a clear mind on what are our unique insights, what are the areas we have true excellence, and what are the unique value propositions that we bring to the marketplace. And that's always been important, but this moment highlights that that's going to be more important than ever on a go-forward basis.
Thank you very much. We only have a few minutes left, so I'm just going to dive into something a bit more fun. We're going to enter into a brief session on quick-fire questions. Now, the rules are very simple. Do not think on your feet, okay? Shoot from your hip. There are no wrong answers, okay? And your compliance officer is off duty, all right? So the first question is very simple. You are sailing solo across the Pacific, and you're given two choices, two things to bring as a companion, ChatGPT or a dog. Chris?
ChatGPT. I'm more of a cat person.
Paul?
I'm allergic to dogs.
Definitely a dog. I'd take all three dogs, actually. Yeah.
Somebody told me that in an emergency, you cannot eat ChatGPT. It's a bit sick, all right? It's sick. All right, let's take it off. Okay, the next question is in honor of Byron Nguyen. For those of you who know him, he published an annual list of top 10 surprises for 38 years. And sadly, he passed 10 days ago. So this is in honor of him. So the question is, what will be the biggest surprise of 2024? Just shout it out when you're ready. Paul, maybe?
There won't be a recession, but it's not what I believe. But I think because the way the Fed's playing around with financial conditions and they're becoming so cute, they're certainly going to try and manage it in a way we haven't seen before. I still think it's at least 50% chance there is a recession, but I think, and the consensus yesterday was that there would be a recession, so that's why it's a surprise.
Sadly, I don't think an end in the wars in Ukraine and maybe Middle East, I don't think, sadly, that those will be surprises next year. I think there's some big elections next year which could throw up some surprises.
Right.
Let's see, I worry about that.
Well, yeah, actually along those lines, I think the rise of a real alternative to the two current frontrunners in U.S. presidential election.
Yeah, so that's in line with mine. I believe that in all the elections in 2024, all the successful candidates will be moderates. It's wishful thinking, I know, but surprise. Okay, quickly, moving on. Thanksgiving. In the spirit of Thanksgiving, what are you most thankful for this year? Quick fire. Peng?
I'm thankful for being reunited to my friends and family and colleagues and new friends around the world, finally.
Paul?
I'm thankful for my family.
Oh, good. Chris?
Yeah, the end of COVID we have to be thankful for that, yeah.
Good one. For me, cash is yielding 5.5%. I've got a place to hide. I'm very thankful for that. Yeah. Okay, something or someone that inspired you recently?
I'm actually being here in Hong Kong, seeing that people from all over the world, all different cultures, living, working together towards a common goal of prosperity, that's very inspiring. We don't talk about that and see that enough in the world today.
Thank you. Paul?
I'm slightly talking my book because I partially funded it, but the conference last week in London called the Alliance for Responsible Citizenship, which was a group of leaders from all walks of life, basically trying to remind ourselves and everybody else that Western civilization actually has some things which are quite good about it, and which were the foundation of its prosperity. And we're in danger of forgetting them and losing them, and they need to be revived.
Okay, thank you. Chris?
I mean, I think, the Chinese market has been pretty difficult, and obviously I think confidence is still fairly low. But, I always say, when you're doubting China, go and visit China. And, just in Hangzhou last week, and I was just blown away by the amount of EVs on the road. Actually, the traffic noise, weirdly, there's loads of traffic, but it's quieter. It's quite weird, actually. And the amount of innovation, and actually that economy is a lot more resilient, I think, than a lot of people think. So, I think that I found it quite inspiring to be there.
On that very positive note, we'll end the panel. Thank you so much. All three of you have been great. Thank you very much, everyone. Thank you.